The Share Pickers Weekend Podcast with Justin, Paddy, Peter and Steve. The content of this podcast is not intended as investment advice. It is for information purposes only. People in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.
Welcome to the Weekend Podcast. I'm joined by Pete, Paddy and Nigerian Steve.
Hi.
Steve's not here, actually. We said Nigerian Steve because Steve called Paddy, asked the Englishman. I just posted, I was walking the dog, and I posted a picture of some really odd, they were quite big, those mushrooms, really red top with white dots on them. It's almost like they've been painted. They're really shiny.
Aren't they?
Toadstools,
definitely edible.
I've never seen a toad sitting on those at all. Have you? Have you seen them?
No, that's just toadstool sample.
Is it? That's what comes in the back of them. Wow.
Yeah.
All right. Well, Steve's out on a date, kissing and smooching, probably. You know what I'm saying? Yeah.
What, 6 o'clock on a Friday evening?
Yeah,
maybe.
He's an early starter, Steve.
He's probably got a 2-for-1 deal or something. Has to be used by
Whoa,
7 PM.
keep it clean, Pete. He's got one girl, okay? He's not going for a 2-for-1 deal. If his missus heard this, she'd be disgusted. He used to do that before he met this lady. And he'd give that up. You just couldn't handle going to doctors all the time to get things sorted downstairs. Anyway, let's. Paddy came up with a very, very good. I should have said at the time in the WhatsApp group. SAP. I should have said, this is a good question for the Weekend Podcast if we do it. And Paddy said, Paddy, ask the question, please.
What is the question?
No, that wasn't the question.
What question are we talking about? I've asked lots of questions.
No, that wasn't the question either. It was about mortgage. You asked.
Mortgage.
Yeah. Remember? All right.
Should I get a 1-year or 2-year renewal? What's happening in the short to medium term with interest rates?
Well,
Doctor.
Let's hand over to Dr. Peter there. Peter, what do you say? What would you say?
Well, I'll get my crystal ball out.
Don't do that. Keep it clean again, Peter. You're bringing it downhill a bit here.
Sorry, my crystal balls.
I know they're polished up nicely.
Right, I'd like to think we've reached a peak and interest rates will start to recede.
I was going to say the love standard of this podcast. I'd like to think we've reached a peak there. Yeah. Cool. What do you reckon? What do you reckon then?
Well, and based on nothing but other than hope, I hope to see that we're sort of plateauing now. And by this time next year, we'd be on a downward trend, so you'd be able to get a better deal. So I would renew for just 1 year, would be my thoughts.
1 year. Okay.
What are the deals coming in at, Pad? What are the rates for the deals?
Well, they've come down a bit. About 3 months ago, they were at 6.5%, and now they're at 5.5 or just under 5.5%.
Okay.
The ones I can get. I'm sure there are better ones available, but the ones that offer to me and
when do you have to sign? When was the last minute day? Or
next month?
Next month. See, that's telling. You see. Oh, it's a gamble, isn't it? Because November, obviously early in November, right? Obviously, the governor and the MPC committee are going to meet up and decide whether to keep interest rates on hold. If they do, I think you get an even better deal, and that's early November. I think November 2nd. But if they decide to raise, and I don't think they will, the markets are rolling over. Everyone's a bit scared. They think, do you see that? Some of the figures coming out now are not good. I mean, even CPI data, which is inflation data. I mean, that did stay at 6.7%. But here's the good thing. This is what Andrew I just read now, just released via email, via City AM. And it said, UK inflation is set to drop markedly for October amid continued efforts to tackle high costs of living. The governor of the Bank of England said. Bailey indicated inflation will return to its recent pattern of slowdowns after the Office of National Statistics recorded a surprise pause last month, leaving inflation at 6.7%. Now, the reason why it's going to come down, right? It's because they do year-on-year and month-on-month comparisons. So last month it stayed at 0.5%, but if you go back a year, so it's been round about that. In fact, let me get the chart here. I'll show you now. Let me just the chart here. Every month, pretty much, it's been going up sort of 0.6, 0.5, 0.7, 0.4. Last month it was 0.5. In fact, in August it dropped. But if you go back a year, right, to October, and that's what we're comparing it back to, then basically it went up by 2% in 1 month. So that's a high comparator. So now they're going to do a month on month, and that sort of drops out. So I think, or that comes in, so I think it's going to drop down. I mean, and they're confident by the end of the year, prices are not coming down. Obviously, inflation is slowing, but compared to last year, it's going to be dropping. And they reckon it'll be 4.9% by the end of the year. So I think, I would go for a 1 year. I can't see, even if they go up by another quarter of 1%, the time is when you do it, when you sign it, when you sign the deal. But even if they go up by another quarter of 1%, which they say it could do, in the next year or so, they're going to be coming down. So I wouldn't go it for 2 years. So the question is, 1 year,
unless there's another, Tory party, experiment.
How long did it take? How long did it take? You are 5 minutes in, Pat. It's a record for you.
Let's not give them. There's plenty of time for them to screw things up again.
Yeah. And the reason, and also energy caps coming down, because obviously last year the energy cap went up and all that stuff, energy went up and all that happened, so that's a problem. Energy cap is now being revised down. That's why our inflation pretty much is a bit of an outlier compared to the rest of the G20, because we are still higher because that energy cap was up too high. Anyway, so
Paddy, were you buzzing after those by-election results?
Oh, there was manna from heaven, wasn't it? Beautiful to see.
Yeah.
But
it's really hard to see if you're working with Rishi at the moment. They must be literally grabbing at any straw possible to stop anything that might suggest he could sneak in, and those were really a kick in the balls, weren't they?
Yeah, they're looking through the stats, the stats men and stats ladies, and saying, can we pull anything out of this at all? Is any positive at all? Maybe it could have been worse. It couldn't have. Okay.
I think they were hoping that they could say, these were bad apples, and people didn't. People were never going to vote for us because of what's their face. But this went even further than they would have dared.
I saw a headline saying they may even get rid of Rishi Sunak before the next election. And I thought, you can't be serious. I literally they're going through prime ministers, faster than I go through toilet paper. It's ridiculous. They can't be doing that. That is fast. That's why I order them by the bulk load and put them in the attic.
I've seen. Yeah.
So ridiculous. They can't do that. And who's going to bring in Liz Truss again? In fact, saying that, the bond yields are as high now as they were in Truss. They spiked up, come back down, and they've gradually gone back up to where they were. So that's a worry. And that's the thing, you see. That's the thing with the market. I mean, the trouble is, what is Rishi doing messing around? Changing dates of all the... does he not realise... I mean, I don't know if he's been in business. I don't think he has. I mean, but his father-in-law has, and his wife has. And in fact, he invests in them via Tory party sort of policies in an indirect way. But you must know that uncertainty, changing the goalposts all the time, doesn't help business at all. You just need a clear path. This is what we need to do. This is how we're going to get to it. If you start moving around, say, now let's extend that by 5 years and do this, then business doesn't know what the heck to do. Does he understand? Billions have been invested into, EV manufacturers, jobs, plans, all this stuff, and he's changing the goalposts. What is he doing?
Well, his approval went down to its lowest level after that announcement as well. So I think he's a little bit. I think perhaps
desperate.
He's under the assumption that Tory party voters are not in favour of the planet. But I think by the very nature, if you're a Conservative, you are someone who's keen to keep the planet alive, and you may not like some of the laws that go around that, but inherently you are pro-environment.
Well, it's about conserving, isn't it? It's been being conservative and living by your means and working hard to get what you earn. But I hope listen, I don't mind Starmer coming in. I hope he doesn't mess around with the ISA though, stuff like that, and start messing around with people who are investing, who've saved money and they're investing and that kind of stuff. I hope they encourage that as well.
Probably
both
tax
sides.
Wealth, shouldn't you? Tax and wealth should be a good thing.
I'm not talking about that. Most people who've got literally ISAs. They're not the real wealthy people. I mean, what they don't understand is this: the real wealthy people, if you start taxing those, they'll get around it. They can get around it. They're clever enough to do that. They've got the cleverest financial...
Taxing the middle classes more. They're the ones that require... The people who've got all their stocks and shares, all their money in stocks and shares ISAs and just live off that. Those...
Piss you off.
Specifically. Those people.
Well, that's what I'll be asking Starmer personally.
Some way of taxing that.
I'll say, listen, are you going to be messing around with the ISA? If you say no, and if you're encouraging people to invest in British companies, I'm with you. But if you're not... I'm out, okay? I'm out. Because we're taxed from everything you do, from the birth of you, everything. What you earn money is taxed. You put petrol in your car, that's taxed. Car tax. You buy a house, stamp duty. You sell a house, capital gains tax. You die, inheritance tax. Everything is bloody taxed. It's awful. I mean, just give us a break somewhere on the line. They start cutting...
It's a good idea, though, that
tax
encouraging
everything.
people to invest in British companies. That's decent.
Yeah,
Decent manifesto idea.
Well,
Did you see the documentary on Channel 4 this week about the property market and how it was, and how the housing crisis is basically as a result of people buying 3, 4, 5 houses as buy-to-lets?
Yeah.
No, I didn't.
It's really interesting. But
do you know what, though?
There was that people saw investing in houses as a lot more attractive than what they used to do, which was invest in stocks and shares, partly because they understand it more and it's easier to get, but partly because of these property programs on TV. So if they can find a way of making investing slightly more appealing...
Yeah, well, they should do. I mean, the thing is, you know what? The amount of listed companies in the UK, and it's not just in the UK, actually, it's around the world, but it's gone down by 60% since 1996. 60%. There's only about 2,000 listed companies now. I remember being 3,500 companies not so long ago. It's nuts. I mean, some of them have been bought up. And in fact, more UK companies being bought by foreign companies. In America, this dropped as well. But it's like American companies are buying America to go and take them private, you know. But, I think...
It's partly down to the weak pound, isn't it? Like, buying British companies over the last few years has been pretty cheap.
Yeah, since 2016, pretty much. Yeah, the valuation of our companies is undervalued.
What happened in 2016?
It was the perception of Brexit. It's not Brexit itself. If you look at the figures...
Brexit.
Hang on, if you look at the figures, our GDP isn't suffering as much as Germany or France or Spain or Italy. We're okay. It's fine. It's not Brexit. It's just the perception of it. It can damage it. So anyway, listen, the market, man. Bring it back to the market, man. Yeah.
Yeah.
Oh, it's a tough one, that market. In fact, saying the market, bloody, it's you've got to respect it, haven't you? It's an awful, mean device. When you're in a situation like we are now, it can be so mean, so hard. 2 years now it's been hard. In fact, the bear market is like a bear. It is like an actual bear, isn't it?
Right.
And every now and again,
good.
you don't mess around with a bear, okay? You stand back. You just watch it, let it go on its way. You don't mess around. You don't prod it. Like some people are jumping in on stocks now, thinking, "Oh, is this a falling knife?" You know, don't. Basically, you're prodding a bear who's having a nap. Don't do that until the bear leaves. Just stand still, or do what you need to do when a bear is close to you. I don't know what you do, but certainly don't try and hit it or punch it, do you? Because it can kill you. And that's the market. And in fact, you know what? Here's an interesting fact. Well, you can be the judge. Interest rate wise. Where do you think we are right now in regards to the average? We are at 5.25, aren't we? I think, 5.25. So where do we think we are? This is going back to 1971 up to 2023. Where do you think we are? No Googling, please. Just off the top of your head, where do you think we are?
Sorry, what was the question?
Where do you think we are right now in regards to the average interest rate going back from 1971 to 2023?
Oh, pretty low.
I'd say bang on the average, aren't we?
Bang on the average, Pad. What do you reckon?
I think a lot lower than the average.
We are a lot lower than the average. The interest rate in the United Kingdom averaged from 1971 to 2023 7.11%.
Okay.
Yeah. Reaching an all-time high of 17% in November 1979. Yeah. That's when Thatcher came in, and a record low of 0.1% in March 2020.
Imagine that, 17%. I mean, this is when my mum and dad bought their first house, literally at that point.
Yeah.
So they told horror stories of the mortgage payments back then.
Yeah.
But the value of their house would have been like probably only twice their their annual wage or whatever.
They decided to buy a house well out of their means to try and push themselves, and then suddenly that was.
You buy out of your means. You say if you buy out of your means, then that's not good. You keep within your means. Don't mess around with your means.
No.
Means Heinz. Listen, so I don't know what that means.
No.
But the difference is, I don't know, I saw this actually a video on X or Twitter that about this, saying, back in the 1960s, people were spending about, I think it was 10-20% of a wage on rent or mortgage. Now it's like 50%. And debt levels. And the trouble is, that average 7.1% is quite, you can cope with that if you haven't got too much debt. And trouble is, at the moment, we've had a sort of, like I say, a money-free, cheap party for the last 10 years when people have loaded up on debt because money hasn't cost anything. That's the problem. It's good that we go back to the point where borrowing money actually, if you don't need to, you shouldn't be doing it. It costs you money. It's the value of money. People don't appreciate that, do they? And now the people are loaded up on debt and big mortgages, and all of a sudden, house prices are dropping, And do you see that in America? Mortgage applications are down to a 1995 low. Because in America, I mean, the 30-year, I don't think they have short-term fixed in America for some reason. I don't know what. Maybe we should start a product like that. But so people are now, coming off those long mortgages, and they're getting 8% rates. And they think, I can't stretch myself when I bought this, so I can't handle it. But I don't think it's. I genuinely think once we get to inflation, and it will come down, but once we get under control, I think there'll be a lot more sensible attitude to money and borrowing and debt. And hopefully that will help, and it'll help the markets. And you realise, these even companies who are taking a lot of debt, you shouldn't have done that. You shouldn't have taken advantage when it's cheap. Just everything in moderation, isn't it? And I think the bear will come. The bear will slope off slowly, and it will be slowly. It won't be like in the Great Financial Crash. Essentially, it's like a couple of guys came out with a gun, shot them in the air, and the bear run. The analogy here is the people with the guns with the central banks, and they're pumping money into banks to keep them afloat, and that can be done very quickly. But with inflation, you can't do it very quickly. So this time we don't have guns. All we're saying is, "Go away, please, Mr. Bear." The bear's just looking at you. What are you going to do about it? What are you going to do about it? And he just slopes off when he's had enough. When he's eating your picnic, he'll go and find someone else's picnic. That's the thing.
What if he eats you?
Yeah, that's the problem. That's why you shouldn't mess around with a bear. And I'm talking about the bear market. Don't get into high risk stocks with lots of debt. Especially with debt, big companies with lots of debt, because you could go under. That's the bear eating your picnic, or eating you. Not even your picnic, you as well. Yeah.
Oh, yeah.
Nightmare. Absolutely nightmare.
Yeah, I'm writing an investment guide, guys. I'm trying to put a lot of pictures in it. In fact, I showed you one of my pictures. And I'm trying to make it as simple as possible, because investing is not simple. But essentially, break it down.
You are.
Yeah, I am. So I'm a good person to explain it, I think. But I'm basically breaking it down to what. Even I can't remember. So I've forgotten the simple premise on which I've based this investment guide.
You've dumbed it down so much.
Yeah. So I was thinking, essentially, it's 4 levels here, right? So what, that's what to invest in. That's fundamental research. So I've got an excellent spreadsheet, which I've updated amazingly. That'll do everything. And when you look at it, in fact, boys, I'll ask you a question here. I came up with an analogy off the top of my head doing taking stock in the week out on my own. And I was thinking, what makes a share? How do you know you're going to invest? If you invest in a company, how do you know you're going to make money? Why? What? What? How do you know? How would you even look? Where would you start from?
I've never experienced that.
Yeah, exactly.
Valuation, isn't it, really?
Yes, that's a good starting point, Pete. Yes, 5 points for the man with the big ears.
Okay.
Paddy, man with the big nose.
Okay.
Oh, sorry. Man with the big ears. Carry on.
I was going to say, and you assuming that there is a valuation gap in, i.e., what you think it should be worth and what the market is valuing it at.
Oh, look at that valuation gap.
Yeah. Sexy valuation gap.
Yeah. Shove the crystal balls in there, eh? So I'll give the analogy of this. First of all, right, you've got to know how to. If you look at small caps, growth is the most important thing. Top line growth is the most important, but also valuation is very important as well. It comes. I don't know how to just put these in levels of importance, but a company, if it's growing top line crazy, almost like valuation becomes less of a thing as long as it keeps hitting those growth levels. But when you actually get an entry into a company, you've got to know what is the value here of this company. What is it? How much value is it going to generate? And will that be enough to see some upside to make that basically next value level point worth it? For example, how much value is it going to create from its present? So I give this analogy. For example, you walk into an antique shop, right? And you see, and you've got a bit of an eye for a painting, and you see what seems to be a Van Gogh. So you go up there, and you say, oh, there's an old lady behind the counter. She doesn't look very sharp. That's a Van Gogh. It's tucked around the back, around some other things. Bloody hell. And I wonder if and you can't see a price tag on it. Right. What's the value of that then? No, you think, that's going to be worth, if that is, a certain period of anger, but that is going to be worth £2 million pounds. Easy, in this little shop, the back end of Guildford, whatever it is, I don't know, Cardiff, whatever. Doesn't matter where it is. That's not important. The location of the shop is not important in this analogy. I don't know why you've mentioned it, actually. But anyway, so you go to the lady, and there's no price on it. You say, "Excuse me, young lady," trying to flatter her a bit. And she's not young. "What's the price of that old picture over there, please?" And she, "Oh, that dear." And you're thinking now, in your head, I can sell that for 2 million straight away. If she says like 10, 100 quid, 5 grand, whatever, I'm in the money. If she says, "Oh, that dear is 4 million," oh, okay, I'm going to lose money on that, because it's overvalued. This shop is overvaluing it. Now, if she does say,
Don't do that.
"Oh, I'll give me £1.50, dear," then you're thinking, yes, I'm in here. The value, I know the value of it. I know it's 2 million. She's selling it for what did she say? 150, whatever. There's a lot of upside there. The same with the company, isn't there? You're a valuing company. You think, okay, looks great. I like the story. I like the hype. But if it's valued like 100 million, literally it's only worth about 10 million, you can lose money. So that's very important. It's valuation, growth, valuation. What is it? Growth, value, health, efficiency, and very important is potential and momentum. Don't forget momentum, boys. Very important. That's why I'm not investing in many stocks at the moment. That's the chart. Look at the chart, technicals, So you got what to invest in, when to invest in it. That's about momentum, looking at charts. And how to invest in it. That is about your portfolio management. How is your portfolio management, boys?
Quiet.
Sorry? Oh, there's a pud. Because one of you said good, it was quiet. Try and speak separately so I can hear you individually. Man with a big nose, go first. Man with a big winky. Hey!
Quiet.
It's quite good.
Yeah. Now, do you actually ever try and manage your portfolio? When you're buying something, do you think, how much am I putting into this? What do I put into it? What percentage of my portfolio? Do you pay any attention to that or what?
Yeah, I have done in the past, but I'm really inactive at the moment, so I'm not doing
it feels like
much.
a long time ago since those decisions were made.
I don't think I'm inactive. That's not what I've heard, Pete. You know what I'm saying? Oh.
But, I mean, I'm sure there's lots of people like that, isn't there? I mean, that's part of the reason we're grinding lower, because nobody's going into no one's dipping a toe in the water.
Yeah. No, I've dipped a couple of toes in the water in certain stocks. But no, it is.
You're very active.
Yes. Oh, I'm very active. Don't tell the missus.
Right, okay.
But, I've said recently, do you know what? About 2 years ago, at the top of the bull market, I'd do a tweet on a company and I'd get like 30, 40 likes quite easily.
Yeah.
And now, I'm not going to get one. It's like maybe it's the wrong company I'm pushing, but it's like But that's how hard it is, So at the moment, it really is. People just switch off, and that's the thing. People do switch off, and that in itself is a bear market.
That's also a reflection of Twitter or X, because I just don't look at Twitter.
It could be, couldn't it? I've not looked at it for ages.
No, I used to look at it a lot more.
Well, he's going to charge a second tier now, isn't he? He's going to charge $1 for people now, whatever. And then you still get ads.
Say goodbye to me.
Yeah, you still get ads and stuff. I think he's got this excuse. It makes a bit of sense actually about getting bots off there, because I get bots every now and again. Like every I say at least once a month, I get someone copying me exactly my bio and everything. They follow a lot of people. People follow them back, and then they'll tweet something I tweet. They think, "Why are you doing that, you idiot? That's my tweet." Now you just let me know that you're away, and I just report them. They go off then. But
talking about valuation, I really don't understand that valuation of Twitter and X and whatever, and I mean,
neither did he.
No, well, there's a bigger game at play there in terms of, I don't know, is it the peer-to-peer, finance and stuff, loans? I don't know. They're going to be changed into a platform that's doing all that stuff.
But even if that's the plan, I'm not going to get involved with him. To be honest, if I had a choice, I wouldn't.
No, I don't trust him at all. Do you? It's funny. I mean, people love him and they worship him because he's made lots of money. But you got to question some of the things he does. Some things he highlights. And by the way, just a quick thought of stocks. Paddy, how many stocks do you own these days? Do you own a fund? Do you own a fund?
No.
No? Oh, Patrick.
Well,
Patrick.
Remember when we were at the top of the market and I said I'll probably just sell on my shares and you told me not to.
Blaming.
That was the point where I was thinking of investing in a fund, and now I'm quite dramatically down. So
well, don't worry. Listen, when the market turns, and it will turn, we're going through literally a desert. The oasis will. Sooner or later, you'll come to the promised land, and I think that'll be maybe Q2 next year. But we'll have a little bit of a rally before then, I think. Listen, we are coming into November, December, two of the best months of the year.
Oh, yeah. Santa Rally.
Yes, can you hear the jingle bells?
The infamous Santa Rally, blinking your visit.
Never happened.
No.
Never, like last 5 years, it's never happened.
No, I did happen 1 year, I think 5 years ago. I think.
No, it's never happened. Maybe like for half a day, but that's it. I'm
going to do some stats on it, right, on the AIM market. The AIM market is an all-time low. It's a 2-year low, pretty much. It's at 775 days. I tweeted about it the other day. But 775 days since the high, down 48%. And it's literally, that's a big sell-off, and it's a long sell-off. And the fact it's been selling off now in October, September, October, generally when that happens, you do get a little bounce coming into the end of the year, new year. But I'll go back and look at it. Of course, there's so many things going on, geopolitically and all that stuff.
What we need is a general election. We need to turn the momentum, the sentiment around in this country.
Yeah, well, that helped, though. I mean, anyway, so how many stocks do you own, Pad?
1, 2, 3, 4, 5, 6.
Okay. What are they?
Eastern People. Biome.
What? Eastern People?
G-Tech.
What's Eastern People?
Space and People.
Oh, right. Bloody hell. Why didn't you sell when I sell?
Because you never tell me.
Oh, you haven't been on the podcast for a year.
G-Tech, that's going well. G-Fin, that's going even better.
I'm sorry.
Polarian, that's going really well.
Bloody hell!
And Trufin, which I'm gonna assume that's probably going to come good at some stage, but yeah.
Trufin's going to blow the market. Do you know what? You only need like one winner there. Trufin, right? Honestly, people don't understand what's going on here. Their sales are massively in the next couple of years, and they're doing very well. All these companies, G-Tech and they will go with the market. I said, they are leveraged like 5 times the normal markets. They've got 5 times faster and down 5 times. Well, I say 5 times again. But so they are massively leveraged the market. But Pad, we start in the next bull market will start, right? And we will be looking at the things and we'll say, right, Pad, get it out, put it in a dividend-paying fund, once a month, pay in a dividend-paying fund or something like that, and then you get an income from it for a couple of years, nice income, just and it'll be fine. That's what you need to do. But you will be able to double, triple those, quadruple those, and get you some of your money back. But it's tricky. That is. How many do you own, Peter?
I think about 8, probably.
Go on then, name them. Don't be shy. We're a bit scared.
No, I mean, I'm G-Tech as well, and Polarian. G-Tech and Polarian. And thanks. And also XPF.
Really? Still?
Yeah.
Remember that?
XPF. Do you know what the XPF
They had a big seller, unfortunately, and that big seller just kept on lowering the share price.
But XPF, right? Literally, it's just tarnished with. It's in a range. It's tarnished with a wider leisure economy, but it's not. It's like the figures are knocking out very good, but literally it's in a range. Once it breaks up, it'll be fine. It breaks up out of the trend. They just need to keep posting those good figures, which I think they will, and people start to realise in the end, this is not a normal pub or a restaurant group or whatever that. Be fine. Did you got Destiny Pharma, haven't you?
Trufin and Destiny Pharma, and I still hold some Lloyds, and I have 2 funds as well.
Which funds are there? You got the All Share Strategy Fund. What's the other one you have?
So that's the 100% equity one, isn't it? And then the other one is the FTSE 100 fund, the Vanguard FTSE 100 fund.
Oh, okay. Does it pay a dividend?
It does, doesn't it? Yes.
Yeah. So this is what you should be doing in a fund. As I said, your age, Pad, plus half. What is that? What are you now? 40?
32.
32, yes.
Plus 16, 48.
48%. Yeah, it should be in a fund. That's what you need.
10% of what should be in a fund? My portfolio.
Yes, the total portfolio. Yeah. But don't bail on those companies there, because one of those may go mega bucks. But
exactly.
Destiny Farm. Did you see the figures from Destiny Farm yesterday on XP on their second phase 3 asset, and basically a new microbiological data. I'm going to finish in a few minutes now. But literally, this is antimicrobial resistance, which is a massive problem. The World Health Organization, they have said that it's one of the top 10 biggest threats to humanity. Because you go into a hospital and you're resistant to antibiotics, you die, even if you're having your nails done in there. Nails varnish or something in hospital. Something really minor. I don't know if they do that these days. But they tested it against all 2,527 Staphylococcus species and basically killed every one of them. Effective against all of them, every single one of them. And currently, there's nothing like that in the market. It'll be the next standard of care. It's worth $2 billion in the US alone. Just kills them dead very quickly as well. Other ones took way. Is it dying? Is it dying? No. But these, within minutes, kills it dead. It's like, I think it's domestos, like domestos. 99.9% of all even as a kid, I thought that marketing was very. I'm not saying Destiny is, but the bleach marketing kills 99.9% of all germs dead. And you think, well, surely the 0.1 is the dangerous one. If you're pouring bleach on it, if you're pouring bleach on it, you can't kill it. What the heck is that? Sort that one out. The others are weak ones. That one you can't kill. That's very dangerous.
Yeah, that's the problem.
And what kind of bug is out there? We're literally pouring it, drowning it in bleach. And he goes, "Oh, that's nice. That's quite nice. Yeah, a bit more of that." Anyway, so that's good. Did you look into? I think you like this, Pad. Did you look into Silver Bullet? Did you look into it?
I did, but the problem is I don't have any money to invest unless I sell this whole lot and then put it into something else, and I'm open to that. Yeah.
I don't think people understand how big this is, right? This deprecating the cookies. It's massive. And people say, well, how big is it? You talk about, markets, size market. First of all, digital market advertising, 700 billion. Google are the main player sort of in there, and they get about 230 billion off Google ads and using third-party cookies. They will be phasing those out in 2024. Already advertising companies, how do we target customers? They're using contextual advertising and computer vision, which Silver Bullet do. And say, well, how big is that? Well, do you know what? You're probably listening to this on the internet. You've probably got a third-party cookie in your browser there somewhere. That's it. Everyone who's on the internet has got one of them in their browser. That's how big it affects everyone, pretty much. It's massive. And there are very few companies that can help advertisers target as effectively as Silver Bullet and their 4D platform. That's how big it is. It's very scalable. It's one of these companies that will be taken up by an American player for multiples, I believe. Multiples, I tell you.
Right.
Anyway, so just do your research, yeah? And the fact is, they are growing very quickly now. That there's obviously 3 years to build that AI 4D product. It took them 3-4 years to do it. It's now fully developed. Obviously, there'll be iterations of that, but big brands are using it. You have sort of, massive companies trialing it. I mean, you talk about global brands already, and or signed up. And they work with Heineken, Dolce & Gabbana, all the ITV, those Oracle, Adobe, all those things. Anyway, so it's worth a look. And also one of those doing well, actually, of mine is Good Energy. Did any of you get into that? I thought you were going to Good Energy, and I quite like that. It's about the decentralisation, pretty much, of energy. They use people all around the country, little energy makers, little people in Wales with their hydroelectric power stations, or people in the south. We've got a winery, and they're using solar panels, and they sell that to other people who want true clean energy. It's a nice way, and they do say in the end it will be complete decentralisation of energy by everyone producing their own. And I see it getting that way, don't you? And they're the biggest sort of player in that field. Anyway, the chart is looking nice. It's breaking up, and it's starting to go. It's starting to go, boys. But obviously that's you won't like that because you don't own it. But
yeah, but it's good to know.
But your stocks will do well soon.
Thanks.
Yeah.
Thanks.
So
Thanks, Justin.
It'll be a massive Santa rally. Don't worry about that. That's nailed on. I've had a word with the big fat man in the red suit, and it's going to happen, guys. All right.
That's good. Good to know.
Okay. Any other questions?
No. That's very good. Thanks. Really insightful.
Okay.
Which country are you in, Pete?
I'm currently actually in Wales.
Oh, really?
Yeah, I'm in Cardiff. Gearing up for the World Cup semi-finals. I'm sure you're looking forward to that, guys.
Oh, yes, so it is.
Yeah,
it's ridiculous, isn't it? I did that. I did like that meme about that four pictures. I sent that. Where it says, do you often wonder how things get there? And you have these cars stuck in certain places, a horse with his head through the fence, and a picture of England's badge in the semi-finals. I do think, I know the old saying, you can only play what's in front of you, but they've had a lucky draw, haven't they?
But I don't know. Not sure. Don't know. Wales didn't have a hard one, but they cocked it up.
That's what happens, isn't it? In draws, that's the whole point of a draw.
Exactly. Yeah.
This is how draws work. Sometimes you benefit, sometimes you don't. Like, you get over that quickly. That's just
but sooner or later they'll get their comeuppance.
Well, exactly. Yeah. So
they're playing South Africa tomorrow night.
In fact, sooner or later. When I say sooner or later, it is tomorrow night. Yes.
Yeah.
If you're listening to this on a Saturday, it's tonight. And then we'll see how good. Do you know what though? Whenever you get that, 2-horse race, and then one is a strong favourite, put a couple of quid on the outsider.
Underdog.
Because it paid you handsomely if you'd backed Japan against South Africa. When was that?
There you go.
Yeah.
Exactly. Yeah. So, put your money where your mouth is.
Okay. Okay, I'll finish on a joke, okay?
No.
Okay, and you mustn't laugh, guys. All right, don't laugh at all. Right?
Don't worry.
It's going to be. It won't be hard for Pad. But try your best because this is very funny. And in fact, I just literally Google this now and scrolling down. They're all rubbish. Hang on.
What you put in joke?
Yeah. Hang on.
You Googled the word joke, do you?
Okay. Hang on. Oh, here we go. This is a good one. Here we go. This is good. Okay, listen now. No laughing, guys. What's the difference between the bird flu and the swine flu?
They affect different animals.
Pete, what's the difference between the bird flu?
This is a joke. Is this a joke?
Yes.
This is a pretty tasteless joke.
It's not that tasteless. This is it. It's a joke. Lighten up.
Yeah.
What's the difference between the bird flu and swine flu?
I can't even think of what the answer's going to be.
Okay. One requires treatment and the other ointment.
Right, there we go. Brilliant. Yeah.
You can use that, Pad, down the pub.
I don't know. There's been hundreds of millions of deaths down to both of those.
Good point.
And Pete actually laughed more at that than my joke. For heaven's sake. Okay.
Yeah, sorry, that's how sick I am.
All right. Cheers, guys. Have a nice weekend. Good luck,
Right.
England.
Yeah, thanks. Bye.
That's a good should need that. All right. Cheers, guys. Bye-bye.
Bye.
The Share Pickers Weekend Podcast with Justin, Paddy, Peter and Steve. The content of this podcast is not intended as investment advice. It is for information purposes only. People in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.